We're going to be doing a quick call today, going over draw and bias, how we find it, why it's so important, and how you can use it. This is going to be a quick video for the level 1 members. Level 2, level 3, feel free to watch as well. I'm going to make this as informative as possible, help you understand. As you know, I linked the PDF on this I made, but if it's easier to understand, you're a visual learner, that's completely fine. We're going to talk through it today. Okay. What is draw and bias, and why is it so important to us as traders? Draw and bias is this. Think of it like this. It's like a finish line. Where do we think price is heading towards? Where's the end goal? Are we heading up to here? Or are we going down to here? Where do you think price will be going within the 15 minute, 1 hour, 4 hour, the time period you're trading and taking your setups in? That's so simple. Easiest way to put it is literally your goal, your direction. Are we bullish? Are we bearish? Because as I said, we do have bias, but I think most people know now that having a bias is good, but in a day, you can't guarantee that we're always going to be bullish, always going to be bearish. So it's better to have a quick draw. You can hop on, take your setup towards target, and then you can hop off. I've said this before, if you don't have that draw, if the draw's been taken out, it's fine to close that tab, turn your computer off. Don't force yourself to trade without one. Why is it so important? Well, as I said, everyone wants a higher win rate in trading. One of the easiest ways to find that higher win rate is using a draw or a bias. If you don't have that, then don't complain when your setups lose or if they fail. We need to be having a draw. Trading is a probability game. If you have a 40% win rate, why wouldn't you want a 60%, 50%, 70%? A higher win rate is always going to be better for you as a trader. Okay. Now, how do we find it? As I said, it's important. I've talked about what it is. How do we find our direction for the day? 2 key ways. Number 1, do we have any anomalies? Sounds a bit weird. A lot of you people, you're going to be thinking, what's that? Literally, I just mean anything out of the ordinary. For example, today, we had news. I think it was something like NFP or something at 8:30. How do we use this as our draw? Very simple. In price, we have a continuous auction. If there's anything wrong, perhaps there's an N-WOG, an N-DOG, an anomaly caused by news, the highs and lows are going to quickly become targets, so price can retrade in those areas and recover any issues. So simple. Devil's wicks, news highs, news lows, N-WOGs, N-DOGs, they're going to be our primary target all time. I know it's nice, it could be bullish, but if you get some crazy news candle, focus on that. Focus on your anomalies. Do we have the devil's mark? Here we have a devil's mark, gets filled. Here we have a news high, and the news low gets filled. And if I'm correct, we had an N-WOG recently. Yeah, here we go, and it gets filled. Anomalies are always going to be a priority in my personal experience. We like to create a fair and average auction. If there's something that's wrong, out of the ordinary, look at it, think how you can trade towards it, think what price is going to do around it. Okay, number 2, as you know, news candles, N-WOGs, they're not very often. They're more rare occurrences. So how do we normally trade on a day-by-day basis? Well, we're looking for liquidity. We know the auction that the market does runs on liquidity. We move to highs, lows, and inducement at all times. And now we also know the higher time frame, the better. Large daily moves are going to be more important, create more liquidity, and have a stronger draw than any 1-minute move. We want to be focusing, where is the liquidity resting on the high time frames and how are we going to take that out? Very simple. I'm going to teach you guys a simple method here. It's called previous day high, previous day low. If we create a high, we're a bullish candle, we're most likely going to sweep out that high the next day. Listen, we're bullish, we're creating higher and higher highs. For example, now we're bearish this candle, we're creating lower and lower lows. It has, I think someone tested it, about 70% win rate. So mechanical. Guys, please research it. Such an easy way for you guys to get better at your trading. Can't stress that enough. When we make higher highs, look towards high highs. When we make lower lows, look towards lower lows. So simple. You can do that in the daily, the 4 hour, the 1 hour. I'll link an extra video if you want on it. But yeah, when we create lower lows, look for them. When we create higher highs, look for them. Okay. Now, that's very useful and all. You know that. But there is some differences. I want to say quickly now. Previous day high, previous day low. Works very well. For beginners, focus on that if you're a beginner. So simple, so mechanical. If you want to get a bit better, of course, you want to go a bit deeper. Well, it's really intermediate, not that bad. Then you can also look on the 15-minute, the 5-minute, even if you're trading on it, and 1 hour, the 4 hour, and you can look for 3 key things we want to be looking at. If I can get a text. Here we go. Equal highs and equal lows. Lows are so good. Engineered liquidity, as you can see here. We create a bunch of lows here, a bunch of lows down here. Look, they get taken out, and a bunch of highs as well get taken out. What else? As I said, previous day highs, previous day low. Such an easy mechanical method, really, really good for beginners. And then what else can you see on the low time frame that's important? Well, session highs, session lows are also good. So I'm really sorry, first time making a video. Probably going to be a bit of yap. I'm not the best at it. But I quickly want to conclude this. So simple. You need to be trading with a draw, which is your direction for the day. And you need to be trading with it to increase your win rate. Trading's probability. Why not go from 40% to 60% win rate? Everyone wants to. Easiest way to do that was getting a draw. Okay, now we know how to get a draw. How do we find it? First, look for anomalies. Anything wrong in the price, anything out of the ordinary created by an NWOG is going to be filled. Price is going to accumulate in those areas. Sort everything out, clean stuff up. Look for that if you have it. And then most days we're not going to have it. So on those days, beginners, I want you to be looking at previous day high, previous day low, higher highs and lower lows. So simple. And intermediates, you can look at equal highs and equal lows. Look for inducement as well. I may do a guide on that later. And also session liquidity can be important. But yeah, that quickly takes us to the end. Get your win rate up. Look for that liquidity. Look for anything out of the ordinary. Think where we're going to auction to off the day and target that. If there's nothing, guys, remember some days it's going to be difficult. Imagine you're just trading in here. There's equal highs and there's equal lows. But you don't always have to create a draw and bias. Sometimes you can just hop off. If you don't have anything, feel free to close the laptop. It's completely fine. You can do that as well. But yeah, any questions, DM me. I may remake this video. I don't really know. First time doing one, so let's see if this is decent.